So many good levels from last week to play off, I'm seeing.
Yeah, absolutely, dude. So as we break into Sunday levels, right, my main thing I want to break into today is not only the levels, but how we identify the levels, right? So I think a lot of traders wonder, right, like how we get our areas of value, right? Because areas of value and interest are so important. Like the levels we look at to trade off of are significant, right? Like what makes it significant, right? Is it the volume? Is it the price action? Is it the previous price action? Is it like, is it the chart pattern, right? Like if you can figure out the right real estate in the market, meaning like where to trade, you got a massive edge already. You know what I mean? It's definitely
100%.
It's so important to be able to identify which levels make sense or why they make sense. Like I just look at like look at this. It's so cool. Look at this previous high, right? Like we were battling, and look at over here the congestion. Like I got this from you, Darren. Look at how price is reacting at the level, right? Like just because we're coming up to supply doesn't mean sellers are going to come in. But if buyers do show up, what does it look like, right? And notice we don't break structure here below this level, right? Look at that. So this is how it's so crazy. I love looking at this because this is how I trade on the 2-minute and 5-minute as well. Like if I'm entering a long right here, if price breaks below this structure, I'm out. But if it doesn't, I'm in. On the flip coin, if I'm looking for a short play, I need to see structure break, right? And until I do, I'm not going short. So it's just really cool to see on all time frames here what this is looking like, right? So let me move these.
100%. Let me zoom out. I'm like let's just go to the daily first, I think.
Yeah. Well, what what I'm going to pop up is the 3-year 2-day. So I found this really helps me. Like because so when we're pulling levels from like super far, I like using this time frame because the 2 days not that much more significant than the 1 day, and it just kind of clarifies like if I do the 1 day 2-year, it's way too much. So this is how I kind of been doing it. It really just kind of helps, and that's where I like got this level right here of 46465, right? Because once we start to pull from really far, it's kind of hard to find the imbalances between, let's say, 475 and where we are right now. So I found that to be extremely beneficial, right? So this way, like say we break above 46207, I got my eye right there on 46465, right? Like that's definitely a nice little critical level. Then I'll pull from this guy right here, right? See what happens at that level, right? Because I try to look at it like, okay, if we get above this, we got to soak this up, right? And then if we get above that,
imbalance right there,
yeah, bam, money shot. That's 2 days worth of price action that was selling. So that's kind of where I'm going this week. If we can get above 462, I'm definitely bullish.
Oh my god,
super bullish. I mean, I guess I got to put it this way. I'm bullish until we get below 45980. So, and on the 1 hour, right? Look,
45980.
That was Friday's high, our pre-market high.
Okay.
Or where is it? Right. I guess we could call it 45966. Something that Friday's highs, last Friday's highs.
Oh, okay. Right. Yes.
So that would be my bullish structure. Right? If we can hold this right here and maybe get a retest at this level, I'm bullish as all hell. And on the flip side, if we break this level, I want to see a retest down at here at 45854. Now, let's dive into where we're getting at. So I like to keep this very simple. It's all structure, right? It's all bullish break and retest, bearish break and retest. Right now we're in bullish conditions. So I like to paint bullish pictures until otherwise, right? So just so everybody listening and everybody that's going to watch this, that's how I like to do that. I like to be like, once again, the if-then statements. If this happens, then this, right? And it's all based on the break and retest on a larger time frame.
Yep. So that's Wednesday. I'm just going to type this in. Wednesday, Thursday high at 458.80. Yeah, 458.80.
Yes. Yeah.
Okay.
That's a good one.
And I also, we also have Friday previous day low with a nice little retest there. So that retest is basically confirming, like, I'm going to draw a level at the bottom of that retest.
Ooh.
And I mean, that basing candle was crazy right at noon on Friday. Yeah. That level was defended strong.
Yeah.
I'm looking on the 15. That engulfing candle was massive.
Yeah. Right off like that open level.
Yep. Exactly.
So remember we were talking about how uncomfortable those are, like taking those? Because, obviously price is selling off violently into like, a pretty odd level. Friday, I made it my mission to put on one contract at that open print. Where did I go long? I went long once we broke pre-market high and held. And bro, I cannot sit here and say that the 9-day EMA does not help me tremendously, because it does. Like, I'll use the 9-day EMA on the 5-minute and be like this. This will keep me from really bad short plays or reversal plays. Like, I always look at it like, if I'm in a long, would I stomp out here? Right? Like, just because we're getting some selling doesn't mean anything. Just because I want to see, maybe it makes sense if sellers show up here and they do a little bit, until we break that 9-day EMA in this scenario, I must remain bullish. And that's been really, really beneficial for me. So instead of playing a short here, because, maybe an inverse head and shoulders or whatever I conjure up in my brain, I'll be like, no, the 9-day is holding extremely well. Structure off 458.50 is holding as well, right? We get this little structure point. So
that was the first bullish break and retest.
Yes.
After that little sell-off.
Yes, exactly. Bullish structure form, boom. So I was like, you know what? I want to go short here because, who knows why, but I'm gonna stick to what this 9 days is telling me. Like, and then once people realized sellers couldn't control that level, you just see, price action really start to rally.
Stopping out. Like, everybody who went short, that was still people stopping out from who were short on news.
Yeah.
Whatever came out that day, they were stopping out at that point. So that's true. I like that level right there, right around 458.80 for buyers.
Yes, absolutely.
That'll be a good magnet. If we break end of day,
yes.
And obviously we don't know what's happening in pre-market, but if we break end of day, and that's a great imbalance down to that level there.
Absolutely. And now that's what I love about our strategy, right? It's like, there's a lot of people right now doing levels, and they're going, oh, this thing's going to rip up to here. This thing's going to go up to here. We're reaching all-time highs. This thing's going to rally, right? And now that's what we call prediction. That's what we call just bullshit. Once you
imposing your will
yes,
on the market.
Yes, thank you. Exactly. Perfectly put. Imposing what you want done on the market. And now that just creates opportunity for you to get smoked. As soon as you try to impose your will on the market, you get smoked. I look at every bad trade I took, last week, last month, last years, 5 years, and it's me imposing my will on the market. It's me trying to predict what's going to happen. So when Debo says something like, oh, if we break end of day, that could be a great target, right? What he's saying is, I only react. I don't predict anything. If and when end of day breaks, I will then consider a short play back down to this level. And that's like, that, like remaining present, like is so critical with trading. Like we talk about like, you know, being masters of self. And that is what we're talking about, right? Like controlling your urge to impose your selfish ass will on the market. That's not going to happen. Like it's just, it's not going to happen. This is definitely a critical level right here. 45850. Look at this. I mean, I would really like to see a retest at this level. I mean, that would be sick. If we could get a retest at this level. I even called out on the Discord yesterday, or I'm sorry, Friday. I was like, if we can come back, like when price was rallying, right? I got stomped out on a short play here, so I missed this rally. And I was like, when price looked like this, I was like, listen, if we could come back to this level, I'm looking for longs, right? And I got that strictly from the 1 hour time frame, this, right? The market looked like this. And I'm like, okay, if we can come back to this level, I'm open to longs. In no way, shape, or form did I think it was going to come back. I didn't know it was going to come back. I was just like, listen, I'm not going long yet, right? I understand we're holding Friday's highs, but I was like, if we can come back to this level, I'm looking long. And then price started to do this. And I'm like, ooh, I want to go short off previous day high, which was a great play for anybody that took that right there off previous day high. That was beautiful. Beautiful trade right there, down to EOD, then down to open, right? Actually tagged open print, or no, it didn't, but it hit that open candle. Oh, my bad. Yeah, it did. It came all the way down. So instead of taking this and this, like we were talking, my goal lately has been to really stick to my plan, right? And not defer from our pre-market analysis or prior post-market, analysis, right? Like, so instead of taking that opportunity, I was like, I'm going to be patient. And if buyers do show up, I want to reward myself for that. Right. And then they did. And that's when I put on that long. And then
another thing that I think is important is recognizing if you missed the move. Because a lot of times when we don't want to admit to ourselves that we missed the move, we're like, oh no, we didn't miss the move. It's still going to do something.
Yes.
And you have to look at your plan and be like, okay, I did miss the move. Now I'm sitting back until the next thing, the next opportunity presents itself. And, we tend to pride ourselves in being so good at finding levels and capturing these imbalances that we always tell ourselves, no, it hasn't. We haven't missed the move. It's still going to go down.
We'll find another one.
If you had zoomed out to this level, you would have clearly told yourself, yes, I missed the move.
Yeah.
The trade I'm putting on now is likely because I can't admit I missed the move and I'm just forcing something to happen.
Dude, I love that you brought that up because that hit me last week, like heavy. I was like, it was on this day or something. I kept wanting the gap down play, wicked bad. And, but I was like, what if it doesn't happen? I was like, like, what if it doesn't gap down today though? Right? Like, what if I'm wrong? What if my analysis is wrong? What does that look like? Am I okay with that? Can I even think that way? And I was like, holy shit. And that actually kept me from taking a couple bad trades, right? It was like, I love how you said that. It's like, yes, we may know how to identify great setups. We may be phenomenal traders, but at the same time, what can make us catch up? What can make us make mistakes? And you said it perfectly. When the move has happened and you missed it, it doesn't mean chase another opportunity because that right there, snap into the program, right? Immediate snap into the program, meaning I'm looking for something that's not in front of me. And my subjective self is trying to create a scenario that's not here. So, and then once you take the trade and stomp out, if you stomp out, hopefully, you then go, oh, wow, yeah. What was I thinking? Well, that's what you were thinking. Them high beta brainwaves were keeping you in a horrible scenario that you were conjuring up in your brain.
Yeah.
Dude. Yeah, no, but you're 100% right. That 1 hour right there really helped me understand, hey, listen, like if we can come back down this level, even though we could, I guess we can call this, this is a pretty large red candle, right? I was like, okay, like if we could get buying, right? And it's funny because I waited until we closed above this level, once we close above that. Oh, another one real quick though, right? Because I was looking for a short. Hold on, this is really good. I was looking for a short play below previous day high right here, right? This yellow line. And I was about to go short right here. And the reason I didn't, remember we were talking about when price gets very extended from the 9-day? So this kept me from taking a short play right here. I mean, we were extremely extended from the 9-day EMA. And I was like, the market tends to level out. And obviously pre-market high was right there. But I wanted to go short extremely bad. But then I was like, what if sellers don't defend it? So what does that look like, right? And it literally, look at that perfect break and retest in a bearish fashion. I was very close to taking that, but that 9-day EMA really helped me not to. And then on this candle, I was really open to playing longs. I was like, because I didn't, but I'm going, look, we got structure right here. Hold on. We got structure right here. Bullish structure still holding. That 459 level was very important. But most importantly, understanding that sellers couldn't defend this told me conditions were still very bullish. I didn't take that long, but that's definitely a trade in the future. I think I'm going to start maybe taking, right? Is like, hey, if sellers can't defend it, then buyers got it.
Yep.
So just that level of awareness of being like, listen, I'm wrong. My analysis is wrong. Could be wrong. And just being open to what it would look like on the flip side of that coin. Super.
Exactly.
You know what I mean?
I find it so easy to just sit around all day and have an idea of what you want the market to do, because we do make pre-market plans, and that is part of our job. But if you're sitting around all day waiting for the market to do what you think it's going to do, it's just going to block you from seeing everything else.
The truth.
And we want to have an idea in our mind, It makes us feel like we have some sort of sense of what's going to happen next. But true objectivity is literally letting the market tell you what it's doing.
Yes.
And that can be a direct conflict of what we have in mind of what we want the market to do. And so we're not going to be perceptive to that happening. So this week I'll really want to not carry around a bias with me. And whatever happens, just zoom out and say, what can I see that the market's going to do based off of structure and based off how I know it moves, not what I think it's going to do or what I want it to do.
You're so right, because one of the main reasons I think the critical levels work so well is they keep us somewhat objective to now moment price action, right? Like a big thing for me was what we were talking about, right? Where we got some sort of analysis in our head and we base our worth on if that works or not. So what happens is we get in our head and we conjure up all these scenarios, and sometimes they're right, sometimes they're wrong. And in reality, we're completely out of harmony with the market information, right? We're just playing a scenario in our mind that we've already conjured up. So the critical level really keeps you like, okay, buyers defended open print. Check. I'm bullish, right? Buyers defended previous day high. Check. I'm bullish, right? Up until I really remember we were talking about the okie doke, Darren. Up until I really when I started to expect okie dokes, I seen a decline in my equity curve, right? And it's because you were trying to predict something. You weren't present. You weren't playing off by the present moment. You were playing off okie doke that may happen. Right. And it's yes, it's important to be aware of those. But once you start trying to factor that into your edge and strategy, you're killing the value in the strategy, which is being completely present.
So true.
True. This might okie doke at this level. And now I'm biased for the okie doke. And now I get smoked. Right. In reality, it's
Now you're gonna fall for the okie doke.
Exactly. Yeah. And now I've manifested the okie doke.
Yep.
Dude, insane. One of my clients wrote me Friday, right? He took this trade. Oh, dude, he killed it. So the trade he took was okay, he trades the 5 minute, right? So so end of day was right here. Let's flesh this out, because what he said to me really hit hard. He goes, no exception. He goes, so he took this long where I went short, he went long, right? Now, this is heavy because now this is somebody that just started trading our strategy, right? He's got brand new eyes to the game, right? Meaning like he identified buyers defending open print, and then he identified buyers defending end of day. Now, notice my analytical mind was looking for the okie doke so bad, I okie doked myself. He watched price come right in the end of day on the 5 minute, was patient, seen it hold, and went long. And what he was looking at was structure didn't break yet. Structure didn't break off open print. It was still holding. So he was still bullish. And I'm going to read you what it wrote me real quick. It was so heavy. He goes, real quick. He goes, hold on, where is it? I kept playing over in my head. Who is in control off open print? If buyers, then we only go long. If sellers, we only go short. Whoever controls the day is in the direction you take. No exception. Right? That's and then he was taking this trade based off the analysis that buyers were defending the open with strength. So he just went long, and he caught this for like 170% and murdered it. And it's like,
fantastic.
Yeah, I was so proud of him because and he did it perfect. He literally just identified buyers and went long. That's all it takes. Keep it simple. Keep it, you know what I mean? Just focus on the critical level, who defends, whatever. Don't okie doke yourself looking for the okie doke. That's all I gotta say.
Yeah. Josh, I want to show you something on the 15-minute chart on Friday morning. So if you look,
Hold on, I'm going to your screen.
Okay, yeah. So you see what we have right here. Okay, aside from the fact that this is news, you see this little red bar ignored right here on the 15-minute.
Yeah.
So we run up. There's definitely sellers that come in, but we got a huge engulfing candle, in a way trapping these buyers that are sitting in this red bar ignored here. And then we come down to retest. Obviously, this was Wednesday and Thursday's highs, and this was that break and retest that we were talking about. So not only was it that, but it was also coming down and letting these buyers here these sellers stop out and give way to bullish conditions. Do you see that?
Yes.
I know that this is the 15-minute, but I see this stuff happen on the 2-minute, the 5-minute, and the 1-minute.
Oh, yeah.
Where if you have a little red bar ignored here, and you're trading with conditions, obviously because buyers controlled this level strong, it came down and those sellers stopped out, and then we got a push back up. I think that's something that I really want to watch this week because I've seen it a lot, especially on the 5 and the 2-minute. But I don't know what you think about that.
Well, no, what's crazy, bro, is that they call that a 3-bar play. I don't know if you ever did anything like that, but like years ago when I first started day trading, the sort of material that was on YouTube was stuff like this, right? They would call this a 3-bar play, meaning this was the ABCD pattern before it was break and retest. Like it was large green, small red, large green. But usually that third green candle, well, because that gapped up right there, you can tell. But usually that green candle,
it happens so fast.
Yeah, that green candle will start at the lows of the red. And then once it blows past the top of the first green candle, that's usually a sign of strength. And yeah, I love now let me ask you this. Looking at that on the 15, I mean, what's it going to take for you to go short? Nothing. We're not shorting.
I'm gonna have to see us blast through that red candle
right
there.
Yes.
Like I'm gonna have to see selling all the way through that red candle in order to be short.
Yes.
And even if this thing wicked down halfway into the red candle, or all the way to the lows of that red candle, I might still be bullish depending on what price action.
Absolutely.
I need to see long wicks to the bottom side into that level, and I'm still bullish.
Absolutely.
That would be a red candle closing below that little red bar ignored in order for me to be short.
Yes.
So it's a good way to think about it.
Yes. Like that right there is when we say strength, that's what we're talking about. Like,
oh yeah,
that. And now, like, I can't help but think, just like going long might be, uncomfortable after some of those candles. And if so, that doesn't mean go short. You know what I mean? That's one thing I'm really going into this week with. Like, just because, you missed the move. I'm noticing a lot of traders struggling with FOMO, right? Like, they miss the move and then they hop into shitty plays. And it's like a snowball effect of hesitation, and then once you actually pull the trigger, you pull it at the worst point. Like I do that all the time. I did that last week. I took the worst trade you could have. Like, I forgot where it was, but it was like you couldn't have bought at a worse time. And it's like, that just stems from, like, fear of missing out, like price is, price already made its move. It's like you were just talking about. Price already made its move, and now you missed it. Now, it doesn't mean take it. It means, shit, maybe you got to wait till later in the day. I don't know, or like, if you must do what's like somewhat uncomfortable at that point. There's some sort of discipline that needs to be implemented. Otherwise, you're just going to continue to throw money away.
Yep.
Yeah, that's a really good way to identify strength, though. I'm going to whip out.
You want to go over cues?
Yes. Let's whip out cues. So, first thing I'm going to do is whip out that time frame again. That 3-year, 2-day. Dude, this is beautiful. Look at this, man. Look at this. Like,
that's odd.
When you, like, look at this. I just love looking at this pattern. This right here is just beautiful. Like, oh, hold on one second. Willers, my friend, do you mind hitting mute?
Oh, sure, fuck.
Thanks, buddy.
Can you hear me?
Yes, sir. How you doing, bud?
Oh, sorry, man. I'm hearing. How are you guys?
Really good.
I just joined you guys.
Good.
I mean, it's pain. So sorry.
That's okay, buddy.
I'm watching you.
Good.
I'm watching you.
Okay. Thanks, buddy. All right,
care, guys.
Okay.
I'm gonna review later, but I'm gonna be watching you.
Okay. All right. Sounds good, buddy. Okay. So cues.
Sorry.
That's all right. Okay. So cues. Look at this. Beautiful. Now, check this out, Debo. Look at this. Look at this. This is beautiful. Look at this gap. So,
coming right up into it.
Dude, look at this. Now, what gives this significance to me is that we bumped into it and rejected. That's what gives me so much significance at this level, right? Because check this out. Let me get the exact number real quick. Okay, so the high of this candle was 390.20. 390.20. Let me make this I switched my levels to yellow, by the way, Devo. Had to switch it up.
Really? No purple anymore?
No purple anymore. So check this out. What gives this level significance to me is that we rejected it to the cent once, twice, 3, 4, 5 times out of the last 1, 2, 3, 4, 5, 6, 7, 8 days. So out of the last 8 days, 5 times this level had significance. And what that tells me, I mean, look at that to a T. Hold on. Let me look at it in the 10-day real quick. Look at this, dude. Once, twice, 3, 4, 5.
Yeah, it's really acting like a ceiling.
Dude,
there. It's
look
crazy.
look at the buying right there. That's insane. That was a wall, right? So, okay. Now, if we get acceptance above this level, which we kind of are already, but like say we get a healthy pullback into this level and we identify strength like Darren just showed on his screen, like we see bullish chart patterns at this level, we're going to get a rip. We're going to get a large move up into 394.14 and then possibly this 402 level. Now, when I'm playing $10 moves like this, obviously 394.14 is going to be a very important level. But this is where our intraday day trading skills are going to come in extremely handy. Meaning, structure. That's it. We must watch structure on these days because when you have large targets like this, right? Like, obviously, this thing's not just going to soar up to 402. I mean, maybe. We don't know. But the thing is if we get selling, what does healthy selling, profit taking look like? You know what I mean? Like we need to be okay. We need to understand that. We need to be, hey, just because I'm long right now and we're getting some selling doesn't mean I exit my position. Like, what does healthy selling actually look like in a bullish trend? There's a couple ways to do it, but my favorite way is structure. Like break, retest, break, retest. 9-day EMA works very well as well on the 5-minute. But I just wanted to throw that out there real quick because I mean we have a very large upside target here at 402 and 404. So I mean just be aware of, you know, selling may come in, and that's fine. It's not.
But also, you know, I don't want to be sitting around all day, you know, not taking longs because we're in a supply zone. Like
Right.
we've been extremely bullish for the last 2-3 weeks.
Right.
And I can't just predict or think out of nowhere that selling is going to come in. Like I have to remain bullish. It's not saying I don't know that we're in a supply zone and I don't know that we're near these highs, but at the same time, I can't you know, prevent myself from taking these longs just because of that.
Right. Absolutely. If anything, I should be, yeah, right. And like, what does that look like? Right. And that's exactly what you just showed on your stream. It's like healthy, what's that? RBIs, red bar ignoreds, right? Like
Yep.
structured points. I mean, look at that, dude. I guess, let me ask you this, Debo. What do you feel about this level right here? I mean, if I'm overthinking it, let me know. But I would probably
39672.
Yeah, I would probably keep my eye on that level as well.
I have a level at 39687 on Qs, and then I have one at 40160.
Yeah.
So that 396 is probably that level that you're talking about.
Yeah. And now check it out, because if conditions remain bearish, sellers will defend it.
Yeah, exactly.
That's how
That'll be a lower high.
Yes.
You know.
Absolutely. If they remain bearish, we'll rip into that and reject. If not, so be it. But dude, look, IQs is looking very you know, I've been not trading QQQ because my whole SPX endeavor. And I think this week one of my goals is to come back to Qs for a little bit, because I mean, just because we open up new relationships with the market, like with futures, with SPX, with whatever you're trading, it doesn't mean neglect your other tools that really help, right? Like I made a lot of money on QQQ. I actually think I made more money on QQQ than SPY this year. So it's like, you know, just because you're starting to do new things doesn't mean you can't neglect that, right? And I'm talking to myself here, but I think I'm going to go into Qs this week a little more.
Yeah, I like picking one. I like picking the one that the levels make the most sense to me. And I don't it's very easy to get yourself confused by looking at both and thinking that they both need to bounce off the same level,
Yes.
and you need to see buying at the same point.
That's why I
But,
stopped.
you
Yeah.
know, yeah. So basically, like, you have to just realize that that's how you've been using it in the past. That's not necessarily what the market's telling you to do. That's just your interpretation of the candles going up and down.
You're a savage. You're so right. It's dude, the level of selfishness is so high, dude.
This is how I see
Yes,
price
this
action.
is
This
how-
is how I want to see it. And if I don't see that,
I'm not trading.
I'm not trading today.
I'm not trading it. No, if I don't see it, I'll just make a shitty move off something else. Unreal.
Yeah.
Now, okay, bearish.
So I'm seeing on Qs, I'm seeing a level off of Thursday's highs, 39126. And that's gone back. That's been tested back in November. And then it's been tested again.
Thursday's highs.
November 30th, we got a big sell-off from there,
yeah.
and then we touched it on Thursday. Now we're above it on Friday. And so I see a nice imbalance between there and then 2023 highs. Not last week's highs, 2 weeks ago high.
394.
All the way up at 394.
Yeah, dude, you just nailed that. That is
So I like that.
That is a money play. Look at that. Now, why is this so damn good? Look at this. It's phenomenal because this paints a super clear picture. Clarity. This paints us a perfect, listen, if buyers show up here, I'm long. If sellers really defend this, like big time breakthrough, retest, I'm short. Now, I mean, all too often we get these rips and then a gap down. Don't let that keep you from a long play. Like you know how many times? Because, let's look at our analysis here. If price comes down to this level, I'm looking for longs. Not if price comes down peacefully, right? How often do we come up with a perfect play off levels but don't take it just because the way it looks? Like if I get a massive red bar or a gap down into this level, I'll neglect to go long. And it's like, no, it's doing exactly what I've said. This is exactly what I've wanted it to do. Just because the way it came into the level doesn't please me or make me feel comfortable doesn't mean it's not doing exactly what I want it to do. I guess what I'm trying to say is all too often I come up with how I want it to look and then don't take it because it doesn't look nice and neat, right? It's not a perfect little healthy pullback here. Instead, it's a violent move into it, and then buyers come in even stronger. So, I mean, I guess that's where looking for those levels to be validated and how it looks when it happens comes into play. And I mean, because there's a big possibility we could sell off, come down below this level, and then buyers come through and defend it. That happens all the time. So really good level though.
Sure, but then I'm playing. If that's the case, then I'm not catching the bottom. Then I'm playing off of my same level. If we break and retest off of that same level, then I'm still taking that setup.
Yes.
If we break and retest to the bottom side, obviously that's a different story.
Yes.
But if buyers shoot down below and it gets bought up, and now we're above that level with any sort of bullish retest, I'm still in that play because my plan is still playing out.
Yes. Yeah. Exactly. It's like, what's your plan? Stick to your plan, regardless. Doesn't matter. Don't. I guess what I'm trying to say is don't talk yourself out of a beautiful plan. You know what I mean? I do that often.
Yeah.
It's like, don't.
I mean, at the end of the day, the levels that we're watching, they're big money interacting with the market. And big money doesn't care how price comes down to their level.
Exactly.
If they're saying, we're selling at 391, they don't care how price came back into 391.
No.
If it says 391.00, they're selling their position and they're making their money and they're out. And they don't care how it came down into that level.
No.
And that's how we have to be.
Exactly. We must identify and adapt. That's it. right? Like it doesn't matter. Just identify and adapt. And I guess that's like,
I'm glad you brought that up.
yeah,
That was a big problem for me this last week, was allowing, how the candles look to affect my perception versus, was it still according to my plan? Yes. So I should have taken it.
And that's what day was it? Let me show you. This one right here. This one made I came up with a perfect bullish scenario this day. Didn't follow it, right? We talked about it. And it's like, and it's all because I didn't like the way it looked going into my level. I mean, dude, look at this off OP. Disgusting. I mean, I wasn't watching cues, but look at this. I mean, bro. I mean, looking back at that short play, Darren, unbelievable how let four candles dictate my ability to trade with market conditions. Unbelievable.
Yeah, I don't know why I wasn't watching cues. That could have,
look at that.
I don't know why I was. Now I need to, I think.
Well, sometimes we obviously you can't watch everything at once, but at the same time,
That's true.
At the same time, don't be. I guess what I'm trying to say is, one of my goals this week, Debo, is to not be so quick to look for the okie doke. Like, don't get me wrong. It's very important to be able to identify large money owning a level in an unorthodox way, right? I guess that's the best way to call an okie doke. And like, it's very good to be able to trade off that. But that is not my edge. It's not my main strategy. So going into this week, I'm slaying this demon. Never again. Like, I'm done looking for okie dokes, right? And just so all the viewers know, an okie doke is when a level is disrespected in a way. Like, I guess, let me find a quick.
It's like for a second, a level is defended, and then it's invalidated really quickly.
Yes.
So, like, it's a place where rushed buyers or rushed sellers will suddenly rush into a position, and then it quickly turns against them really fast, and they stop out. And then that's where you enter really quickly. This
is actually a pretty good setup. Friday's open print. Now, Darren explained it perfect. It's literally, you're looking, it's doing one thing. Hold on, shoot. Okay, so right here off open print on SPY, open print would be right here at 456.90. Now, we got sellers defending it once, twice, right? We rip into it, sellers defending it. So this is a break and retest to the downside. That's the okie doke. Boom, right? Where buyers
good example.
just rip through it, right? This is a bearish chart pattern, right? Sellers defending a level, and then bam, buyers just invalidate it completely, disrespecting it, right? So what I'm trying to say here is, instead of not taking this short, right, because I'm looking for an okie doke, right? Like, I'm predicting. I'm trying to impose my will on the market. So one of my goals this week is, obviously, if your edge presents itself, trade with your edge. This is definitely a trade I would have took off open print. But yeah, so that's just one thing, I'm really going forward into this week. And then, check it out. I literally then it came down, presented itself again. This is another perfect example of an okie doke. Break, retest off the level, and then bam, buyers defend it. This is, I would call maybe this candle. This one's definitely a shift, but maybe this candle, honestly, maybe even this candle, acceptance at the level is really, but that's like, and I know we don't use moving averages like that, Darren, but hold on, what day is this? 12/7. I want to show you, like, that 9-day really does help me sometimes. And I don't, and I want you to, I would definitely want, like, I don't, do you use the 9-day, Darren?
No, I use the 20-day. Oh, I've started back testing the 20-day for entries, not necessarily for holding on to a trade, but for entries.
Right. So check this out.
So I use the 20-day on the 5-minute time frame, and I haven't been like basing my trades like heavy off of that. I just
Playing
putting it
around
on
with
my
it.
chart, and then every time I see something, I just journal it, and I see like how well it is respected, basically.
Yeah, right. Well, and like in this scenario, massive sell off under it. Say I'm looking for a retest here off open print for a short. I won't take it because it's so far away from the 9-day. Like I guess what I'm trying to say is like a healthy trending move, price it hugs the 9-day. Like this day right here, price is kind of hugging the 9-day. That actually was pretty wild, but I guess you could call this one right here, right? So you see how price sells off, hugs the 9-day, sells off, keeps hugging it. Then once we get above it, the trend changes. So that's kind of like, the methodology behind it is like, if you're super extended, beware. And it's definitely helped me avoid certain setups for sure. And and that's the thing, right? We talk about it all the time. There's no right way of trading. It's all about you and your execution. So, if it's going to help you stay in trades, that's initially why I started using it. Is like if you're, if it helped me stay in longs or anything for that matter. If you're above it, But yeah, really good, man. Those are the levels I'm looking at.
I think that's basically it. I think the main thing for this week is, so I just looked. It's CPI news, CPI and PPI on Tuesday and Wednesday, and we got some Fed speeches. So I guess watch for that. But at the same time, we talked about coming into this large supply zone on Qs. Don't just not take a long because you're afraid that sellers are going to come in. Like you have to listen to what the market's telling you, and if it's telling you bullish, then that's what you have to go with.
Yes.
Like the market doesn't have to do what you think. The market does whatever it wants, but it will give you hints about what it's doing.
Yes, it will tell you.
It's probably not going to be what you're conjuring up in your mind.
Right.
So
that's
what I'm focusing on going into this week.
100%. Like if I could just remain in tune with the market and not assume, right? Instead, just completely objective, thankful for what it does, no matter what. Stop losses in, don't overthink, and just and just remain aware. That's my goal right there. And phenomenal.
100%. I'm ready to get it.
Phenomenal. Thank you, Darren, for your time. I appreciate it, bro. This was a phenomenal Sunday level recap. We're going to be doing these now. So anybody that wants to get involved, hit the links below. Make sure you like, subscribe, and level up. And I will see you guys next week.
Have a good week, everyone. Take it easy.